Welcome to this Killick Explains video, which is all about 3 popular financial products that frankly you may not need. You may never have needed them, and now would be a great time to look at cutting back. Why? Well, you don't need me to tell you that household budgets are being stretched at the moment by a fairly aggressive combination of falling real wages, that is to say wages after inflation, rising bills, and of course rising interest rates as central banks like the Federal Reserve and the Bank of England grapple with what to do with inflation, which at the time I'm making this video, summer 2022, is in danger of popping above the 10% level in the UK. So it does make sense to cut costs where you can. Now, I've talked about putting together budgets and the importance of planning expenditure and so on, particularly in this tricky environment. But here, I want to talk about a specific aspect of budgeting. So the point of making a budget is to start pulling out cost lines on a monthly basis that you might be able to do something about. Ideally, eliminate them altogether, but at least reduce them or find a way to get the cost down. And that's what this video is all about. So, what are the 3 financial products that I would check whether you've currently got and have paid for and you may be able to dump? One is unnecessary warranties on products. The second is duplicated or unnecessary insurance products. And the third is expensive unused subscriptions. Now, there are more, but let's deal with those 3. Firstly, pointless warranties. Now, retailers keen to make some money at the moment on goods which frankly don't fail very often. Modern goods are built to last. Toasters, microwaves, CD kits, whatever it happens to be, are all built to last. So adding on a warranty is a way for the retailer potentially to make a little bit of extra money. And these things can get expensive. It can be hundreds of pounds. And what they do is they say, well, you've got peace of mind. If you take this warranty, pay a bit of extra on top of the product, then you've got peace of mind. Because if something goes wrong within the next 3 years, let's say, you can simply bring it back and have it fixed or replaced. What's not to like? Well, the bit that's not to like is you don't need it. All right? And the reason you don't need it is because you're already protected. There is a thing called the Consumer Rights Act, which talks about selling goods at a reasonable quality, if you like. They have to be satisfactory. They have to be fit for purpose. And that act gives you statutory protection. So if you buy something, a toaster for argument's sake, and it fails a month into you installing it in your kitchen, you can simply return it and say, well, this isn't fit for purpose. This isn't of satisfactory quality. You don't need to have paid for a warranty. The warranty is academic, if you like. And the second point I'd make is that not only are you statutorily protected, but these days, modern kit tends to fail fast if it's going to fail at all. You don't generally need a 3-year warranty on something like even a washing machine or a dishwasher, because if it's going to fail, it'll be because it hasn't been built properly and it'll be failing quickly. So you can take it back and get a replacement usually fairly quickly within your statutory rights. So my advice is don't sign up. So check the small print. Don't fall for it. Don't get bullied into taking a warranty. Bullied is probably the wrong word, but persuaded to take a warranty when frankly you probably don't need it. So there's saving number 1. Number 2, insurance. Now don't get me wrong, I'm not saying stop paying for insurance. That would be crazy. There are certain things we do need to be insured for. So car insurance, for example. We need home insurance. We need travel insurance. And then if we're looking to protect ourselves and our family, for example, from something else going wrong, illness, redundancy, for example, there are policies out there which can make sense. Life assurance, so that is making sure that mortgage debts can be paid off in the event something goes wrong, for example, critical illness cover, income protection in the event that we suddenly lose a job, for example, through illness or some other means. Those are all worth having, but do make sure you're not doubling up and do make sure you still need it. So what I mean by doubling up is, perhaps you used to be self-employed, you set up all this extra insurance you needed, now you work for a business and they provide some of the cover that you need. It's part of your package of benefits. So check what you get at work. Don't double up, don't buy extra. Check it's still relevant. Because some of these policies, critical illness cover, for example, they only cover certain conditions. The small print changes over time. So I know it's a bit boring, but have a look through those policies. Make sure they're still going to cover you for the thing you're paying for every month for the policy, if that makes sense. And do shop around. We're terribly apathetic. I know I am. We tend to stick with the same bank, stick with the same insurer. We can't be bothered to move. But it is worth a little bit of effort. Do a review, and now's a good time just to check, have I only got one set of cover? Does it cover what I need? And is it still reasonable value, or could I get it cheaper elsewhere? Thirdly, unused subscriptions. A pandemic meant we went subscription trigger happy. We all did it. I did it. I signed up for heaven knows how many subscriptions so that I could watch stuff at home because I couldn't watch it anywhere else. You know, Netflix, Amazon Prime, Disney, HSS, and so it goes on. Sky. Now, I'm not saying you should be sitting down and cancelling all of those to save money, but what I would say is all subscription models, not just when it comes to entertainment, work on apathy. They work on the idea that you sign up and then you forget or can't be bothered to go through the cancellation process. All right, and it's not just entertainment I'm talking about here. Things to have a look at that you might have signed up for in the past and no longer need or use or no longer get really good value from. In other words, what I'm suggesting is you could pay as you go rather than just having a subscription leave your account every month. Include gyms, obviously all sources of entertainment, magazines and media, for example. Worth just doing a review because it all adds up. You'd be surprised on a monthly basis, and checking you're still getting good value. So check, am I still using it at all? What am I paying? Because these things have a habit of creeping up. Again, it's kind of small print, you often don't notice. And what are the alternatives? All right, now we're post-pandemic. Realistically, have my habits changed again, back to something like normal? Do I actually need to keep all these subscriptions rolling? So there you have it. There are lots of other ways you can save money potentially, but I think those are three good ways to start thinking of areas where you could make potentially quite substantial monthly savings. Now, if you'd like to find out more about this topic and related ones, budgeting in particular, please feel free to access our quite comprehensive library. Easy for me to say, killick.com/learn. If you'd like some more information about different life stages, incorporating budgeting and one or two other things, do ping us an email to get a copy of our guides, and that would be editor@killick.com. And if you'd like a copy of our latest quarterly flagship magazine, Confidant, which often contains a planning article tackling some of the issues I've just mentioned, then it's also editor@killick.com.